Welcome to the Deal Room, where we break down the latest trends and challenges in multifamily real estate. I'm your host, Don Favia, and today's episode is all about navigating the complexities of commercial insurance. I'm joined by Alex Miller, Assistant Vice President at Greyhawk Insurance, with a diverse background ranging from the cannabis industry to construction of orphanages in Mexico. Alex brings unique insight into risk management. Today, we'll be diving into the recent upheaval in multifamily insurance, including the challenges of insuring older properties. Let's get started. As a commercial broker, specializing in apartments, obviously it's been crazy. There's been a ton of upheaval insuring multifamily properties, which are considered commercial, and a lot of big national companies are leaving the state. You've got owners that have buildings that are 50, 60 years old. They've never really had an issue insuring them. They've got older roofs, electrical panels that could start fires, older plumbing. What have you seen in terms of making these properties more difficult to insure? And how are you guys addressing the problems, or what are you telling owners right now?
A couple years ago, even homeowners, they didn't have to be engaged with their policy. Right. The minute you get a cancellation request or a non-renewal, you're like, hold up. Some aerial plane flew over my house and said, what? What's going on here? I've been paying you guys for years. So the first thing that everyone needs to realize is the beauty of insurance is that it's aleatory, okay? So I can sign a policy this very moment and go and fall somewhere and get paid full terms for a slip and fall, this and that. I can sign a motorcycle policy and go get in a wreck and 5 minutes later be covered. At the same time, I can pay for years and it never happened. So that's in my mind, like, I grew up not thinking it was fair, but now I totally see it as fair. They're taking all the risk based on those large numbers. Now it's approaching the real estate space. So I even have friends who hit me up and they're like talking about California Fair Plan. And I'm like, dude, how do you even know about that? We're seeing the need for that to happen, not only in the commercial space, but for sure in the residential space because of the pullout from these big players. State Farm is, in my mind right now, a total anomaly. You will go to a Dodgers game and you will see State Farm all over Dodger Stadium. On the commercials, you'll see Jake on halftime at the Super Bowl that's in San Francisco, that's in California. They can't even write insurance in California right now. So you call State Farm today and they cannot issue you a new policy, especially in the commercial space. They also have a tanking rating of like a B-, I think it is, which means these are reserves issues. These are claims issues.
They may not be able to pay if something big happened.
The rating is proving that they're not paying.
Yeah.
And then finally, you have premiums. Everyone goes, the premiums are out of control. When you become an admitted market in the state of California, you're basically going out and saying, if we tank, you don't, because the state's going to cover your back. An admitted market states that if they go out of business, California will reinsure that risk. State Farm, in our opinion, is basically, we believe they've played somewhat fast and loose. The premiums I've seen, the previous policies I've seen are potentially underwritten on property value. They're potentially also just, you look at these policies where it's millions of dollars of TIV, and we're looking at like $800 to $900 policies. It just doesn't even make sense. They're, from a TIV standpoint, they have lower values because they don't insure like super high net worth individuals. But at the same time, when a high net worth individual who's got a $5-10 million house sees a policy that's like $1,200 a year, and now it's in a fire zone and nobody will take it, and it's like $50,000, what do? So that is a personal lines conversation, whether it's, we can go into the state ideology about brush areas and how we can maybe draw those back and increase our defensible space. That's a great, and yeah, I've seen goats on the mountainside, Don. I think people are like, they're like releasing goats to eat this brush. And could we reach that? It's a genius idea. They eat. I was like calling all these goat farmers a couple of weeks ago. I was like, let's do a deal here. At the end of the day, though, that's a personal lines thing. That's also up to the state to help sort. But how do we help the commercial customer who is struggling right now? You talk about 40 to 50-year-old buildings. I'm writing apartments that are over 100 years old right now. It's all about telling the story.
With premiums rising and coverage tightening, like how are you approaching fostering trust with multifamily owners that are facing these challenges?
I have a client with 200 properties in Los Angeles.
Wow. Yeah, that's big owner.
Apartment. I mean, huge. And everyone goes, oh, he's rich. Who cares? Yeah. What is he going to do? His entire portfolio is like tripling. How can he still pay the bank? How can he? It's insane. And even with these premiums, telling the story like we're talking about, for me, it's all about communication. What I love about insurance, actually, 50% of it is with the client and the other 50% is with the carrier. It's my job to tell the story. If a real estate agent is going to make a house look like the star, I need to make that client look safe, whether it is potentially, and I know it's weird. You ask like clients for resumes and things like that, but it helps. And I know people think that insurance is a guarantee, but I think reformatting your mentality for almost like you're presenting yourself and your asset as a way for you to be protected, but also for them to make money. So you do have to have a resource that is clean. I mean, I talk to these commercial, like, you don't think that the two homeless guys that are sitting outside your Starbucks are an issue right now. But then when I'm going for quotes, I've had declinations on Starbucks, Don, in the middle of shopping centers because they're Google images of homeless people. So you gotta just communicate with the client. You gotta let them know what we're getting into.
So you're always recommending that if you even think that there's a non-renewal on the horizon anywhere, to start contacting somebody like you, have them start digging into it, because these things take time. You can't just go find a replacement insurance for a property that's being canceled overnight. It's got something that takes time. And the more time that you have to work on it, the better sources, the better options they're going to have.
And think about just overflow right now. Like, these companies are getting slammed. I think like 75,000 State Farm non-renewals and cancellations.
That's crazy. That's crazy.
They're just flooded. So quotes.
What percentage of your business is that type of customer right now?
About 50%, because now our turn and the sales portion of it is showing a State Farm person that's been paying $800 a year that, hey, actually the coverage was a little soft anyways, but here it is now. It includes all these different things. You used to not have this. I think the biggest thing is just having that authority as a broker. I also think Greyhawk is dangerous because we shop every year. We're not an auto renewal brokerage. Like, we'll take it. That's how you make your money. Everyone has their own dedicated account manager. We're going to take them, and I'm going to go to 6 or 7 markets. They're going to go to the markets, and we're going to present these marketing reports to the clients so they know the customer wins when the agent competes.
What kind of practical advice are you offering them to better manage their risk and also to ensure that they're able to get adequately covered?
Get on it 2 to 3 months beforehand. In insurance, we're allowed to start really working on it around 120 days out.
Giving you the time is the number one thing.
Oh, get time.
The number one thing, time.
Because in terms of the just all the extra applications that are in just being serviced right now, it's like when you see State Farm service so many clients here, almost every single one is these apartment buildings, right? When people are talking about electrical panels, breaker boxes, all these different things, telling the story. I'm not going to tell you exactly what we've done.
Right. But we'll let the secrets out.
But I can tell you this, that we've beat Lockton, who's one of the biggest brokerages in America.
Wow.
Because we wrote it right. And we had the exact same market, and they got declined a quote.
How can my audience find you if they have questions about their properties or if they just need help with any specific insurance situation?
Alex Miller. My email address is amiller@greyhawkinsurance.com.
Terrific. Thank you so much. That wraps up another episode of The Deal Room. A huge thank you to Alex Miller for sharing his valuable insights on the commercial insurance landscape, especially for multifamily owners dealing with older properties and rising premiums. If you're interested in reaching Alex for more information, you can email him at amiller@greyhawkinsurance.com. Be sure to subscribe to The Deal Room for more expert conversations, and we'll catch you next time. Thank you for listening. Bye.